into this Friday stream where the market is pushing up to new highs, or at least the S&P is new highs for the week. This is XBI. Let's go to SPY. Look at that. So SPY is now pushing up over Wednesday's highs that got up into this band, which we'll kind of cover that in a second. And it's going for, looks like maybe we'll see a 390 push into the end of the day here. Why that's important is because that's been the spot that we've had a pretty interesting, I guess breakdown, right? We had this area hold to support back in here. Actually, it was a pretty interesting area of interest, back in, it was the dip buy zone back in late July, which was the last earnings cycle that we saw, was a resistance prior to that, a couple weeks, gap down, top of a gap. It was a pretty cool, it was a pretty interesting spot to keep in mind. Bounced pretty nicely in September, popped up and then tried to hold it. And then once we fell through this, we came back up to test 390 and got rejected super hard back on the 21st of September. So it's been a really interesting spot, which it looks like, man, SPY just wants to plow right through this thing. It seems like, as in terms of where it's at right now. So it's pushing up towards that as we speak. It actually got another push to a new high of the day, hit up to 389.19 or 389.20 now. So 390 looks like it's very possible here into the close. Like it's one of those classics Friday squeeze out days where we kind of just, we rip off the open and then almost just kind of melt higher all day and just kind of squeezes out. And especially after this earnings cycle, you can easily see that people don't want to hold shorts over the weekend here. Just like over the past couple of weeks, no one wants to hold, longs. Everyone was selling a lot of pressure on Fridays. Because of the news cycle, the market was weaker, and it's all about the perception. Right now, people are like, oh, things are good, or at least they're looking at the price action saying, oh, it's going up. Not, time to, get out of all shorts or time to buy back in and, market's reversing here, which it may very well continue, but it's got to clear this 390 area first. And then ideally in a perfect world, what you want to see is it get above that and hold it. We're clearing that 50 SMA right now as we speak. I'll pull up the 200 SMA up in a second. But you want to see it break above and then start to build higher lows up in the upper 380s, 390, and then go from there. And I think we're going to $400 next on SPY if that does hold up. So we'll see. But that's, I guess, next week's situation. And also next week, we got the big Fed meeting on Wednesday, I believe, the 2nd of November. So it's about 5 days away from right now. We're expecting that 75 basis point hike, but I think the rumors are already kind of coming out that there may be some more talk of a 50, or at least talk from Powell of lowering the hikes going forward, this being the last 75, and then maybe a pause at some point soon. And those talks will probably become a lot more realistic in this meeting. At least that's the rumor. We'll see if it actually pans out, but that's what everyone's kind of, potentially expecting from Powell, which may be why, you're also seeing some decent strength here the past couple of days, despite the earnings kind of debacle that we've been seeing across some of these names, Amazon, Meta. Apple was fine. Apple did okay and held up pretty well. Google got rocked pretty hard. It doesn't really matter. Market's kind of bouncing higher. But what you're seeing, though, is you're definitely seeing a decent outperformance here across the S&P compared to the Qs. So S&P and the Dow. Well, here's the Dow. Look at DIA. Look at the Dow. The Dow is actually getting awfully close to the August highs, the August peak area. So we're about $12 away on DIA. About $12 away on DIA, the Dow Jones ETF, like SPY or QQQ, but just for the Dow. This is like a beast. This thing looks like an absolute monster, headed up for that level right there, which really, that's where we've seen the most strength across kind of the safer stocks, right? Less volatile names. Also, IWM, the Russell has been relatively strong. Obviously, it's down a ton, but it's been relatively strong as of late. It it barely made a new low back here. It only made that new low, and it barely did back on the CPI date on October 13th. But if you look at the QQQs, the Qs are not even at the week's highs, and that makes sense given that we've had some pretty big moves to the downside across Amazon, Google. Those are some stocks that have heavy weights in the Qs, and so that's why you're seeing that underperformance there. But Qs are not at that 50 SMA, whereas SPY is breaking above the 50 SMA. And they pull up the 200 SMA. Let's pull this guy up. SPY's nowhere near that 200 moving average, which is all the way up here towards 409, 410. QQQ, that moving average is all the way up here towards 315. IWM, it's getting close. IWM's above that 50, pushing up towards that 200 will be up around 188. And then DIA, the Dow, is actually breaking above that 200 period moving average, believe it or not, right now, today, as we speak, with some pretty nice strength. So that's a big update as to what the heck's going on right now. But if you look across the board, you might think to yourself, well, I'm looking at some stocks that I was holding and, maybe they aren't bouncing as much. I think you're going to definitely see, well, you're seeing more strength in some of the industrials, right? The Dow. And you're seeing a lot less strength in tech. So if this rally was to continue, it might take a little bit of time for tech to start building itself back up and might lag, at least in this bounce. If it does continue beyond, Powell talking next week, and we'll see what happens. But you got to expect at some point there's going to be some pullbacks, right, along this road. And it would be healthy to see that if we are going to actually go higher, and see a pullback, kind of scare people and then bounce and hold. That's kind of what you want to see. So we'll see. Great squeezy day. That's what it seems like, right? That's what it seems like. Get back into grill small size. I like that idea. I think November is going to be the time that I'm going to be there. First half November, I'm going to probably have a couple names that I'll start averaging in. It's very small, very, very small, because I don't want it to, ultimately mess with day trades or whatever. But that's the deal. Been pretty decent across the small account and also the other account too. The Weebles account, Weeble accounts today was pretty good, or this week. Playing it pretty small, playing it, without having to go too heavy or anything, but just kind of making sure I have a good feel for it. We'll see how it plays out. What do I else? I have this Labu that I'm looking to see if I can dump a little bit more of that if it pushes into the close. It looks pretty strong. This zone here around $7 was a nice area of demand to play off of. Only other thing is a Rivian call. I got a Rivian call here, very small size, not even like 9 contracts at a $10 average, which is pretty small. I might even grab one more here into the close. Just playing with playing with some profits. Reason why, because this could be like a 2 or 3xer into next week. And the reason why I like it is I jump back to Rivian stock. If we keep seeing the risk on trade being there, look at Rivian's chart, by the way. Look at that. You got a big flag. You got a big flag right here. After a big move up on Monday, it's pretty much consolidated the rest of the week, which is just kind of coiled up for the next leg if we keep going higher, or if we still see the risk on trade play out. We'll see. I'll cut it under like this 34 area. This is the zone down to like 33.90. We break below that, I'll be out. But I have next week expiration calls, so we'll see if we get a pop through. If you look at the daily chart on Rivian, this thing looks primed as well. You're perched up right on that 50 moving average, which is sitting here around 33.34 or 33.90 or so. 33.95 is where it's at exactly. So essentially, as long as the 50 SMA holds on the daily, I'll be in. But it's small, very small, and I'm not gonna, I'm not gonna be swinging, very heavily in these guys. So we'll see. But that is the plan going forward. So Rivian with a little bull flag set up, been playing out pretty nicely this past week as for the market in general. Snapchat, let's see. Snapchat's about to fill that gap back up from prior to the earnings crush there on Snap. But man, it's looking pretty good. It's looking pretty good, I guess, for the bulls. So we'll see if the strength can continue. SPY got up to, look at that little, see, this is an example of like these dips are getting bought up no matter what. Popped up to 389.26 and then had a pretty hard dip down, about $1 dip, but that dip was just immediately bought up so far on the 5-minute. Everything is getting bought up. TNA could be a good idea. Small caps, yeah. The only concern about small caps, I would say, would be some earnings, I guess, coming up, and some other, because then the big tech guys are out the way. You got a lot of small caps with earnings of the coming weeks and months. So we'll see how that plays out. But I'm not, again, like we said last time, I don't think it's going to matter very much, especially if you're looking at some of these smalls that are sitting at 52-week lows, 2-year lows, 3-year lows, all-time lows. I don't know. It depends upon what you're looking at. There's no volume there. So even a bad earnings is not going to be is not going to matter that much unless the company is going under, which sometimes actually ends up panning out to these crazy reversal trades. Appreciate it, man. Just want to thank you for helping me trade this week. Your messages, informative videos. Awesome. That is awesome stuff to hear. It's been an interesting week. I think it kind of pans out like kind of similar to the move we had back last earnings, where even despite the earnings and everyone was kind of scared and freaking out, what do we have? Well, we had a pretty strong week in the S&P, and guess what? This week right here, after a Monday, I guess we popped up on Monday, Tuesday. So we finished, let's just look at where we were. We finished last week right here, okay? And now we're up here. So what's the percentage gain on that from last week's close to right now? If we close up here, that would be about a 3.8% gain on the week. That's nothing to sneeze at, not insane. We've seen bigger moves in one day, up or down, I guess, or I think, down. I'm not sure if we had a 3.8% up day. We definitely have. I feel like we have this past year. But that's a pretty decent week. It's a solid week. Maybe not as good as what we had that week, last quarter, but it's a pretty solid week. Can't complain. So we're sitting right here. This is the spot to watch. We broke that 50 SMA, yes, but 390 is going to be your next, crucial zone. And again, I would be very cautious, especially going into a Fed on Wednesday, that, to think that we're just going to keep plowing right along, or that we're going to just, we have to pull back because this is a key spot. We can very well kind of plow through, hold it, bounce, whatever, and then Powell can come in and just completely change the game. So that's where I'm not going to be looking to hold much or anything at all into Powell's situation outside of what I already have in the Robinhood covered call portfolio and all that stuff, but that's the plan. Small cap earnings, gorillas, earnings 15th. I don't think it should be a big problem. But we'll see. Of course, holding into earnings is always a risk, so you got to be careful with that. Let's see. Yeah. All these small caps on my list are all down today. So you kind of the good thing, I guess, is that you're seeing the correlation's not there, right? And I think what we might be is a couple weeks early if they are going to really run, right? Especially if the market keeps up into the end of the year. If this rally sustains into the end of the year, then that's going to support some of these small caps that are absolutely bottomed out, but they're not correlating perfectly right with the market, which is actually, I think, a good thing, because that means when the market pulls back, doesn't necessarily mean that all these stocks are going to dump, right? So what some people like to call, or like to use some terminology like as a basket or as a collection or whatever of small caps, that's one way to do it. So if you have a list of 10 names, I don't know if 10 is maybe the best idea. As we've seen, when you're in so many names, it can get very complicated to follow everything. But if you've got a list of a couple names, maybe you take, let's say you had, 20% of your portfolio or 25% of your portfolio that you wanted to put into small caps into like, the next couple of months, into the year end, right? Quarter 4, quarter 1 time frame. And, out of that list, you have 5 names, whatever it is, and you kind of evenly distribute that money across those 5 names. And, if 1 or 2 or 3 or 4, right, they pop off, lock the gains in, and then, you hold the other one until it goes, or if it doesn't go, or we get to like March and it hasn't moved and the catalysts have passed and there's nothing left that, you really feel good about, get rid of it, cut it for a loss or move on. That's kind of the idea about playing the small caps into the end of the year, because you can put all your eggs in one basket, and if it hits, it's going to be killer, right? But that's not necessarily, you have no idea what's going to happen. You have no idea, because you can have an idea of, there's a catalyst for the stock, and you have a binary event, or you have a time frame for a catalyst and a date to run up into, right? But if that doesn't pan out, or if that doesn't move the way you thought it was, right? Then you put all your eggs in one basket, and you probably missed 20 other potential plays because you had all your stuff in one. So that's what I would say, is have a basket of a couple stocks, bottomed out tickers. Don't play anything that's up a lot already. Obviously, it could go for more. Anything could go for more, but the risk reward is just not there. I think that's the plan. At least maybe we'll deploy that. And I think, to be honest, my plan, or like a better idea, would be to do that in the small count, especially as we move through to not really having to necessarily trade that at some point, because I have the other Webull account that's a cash account now too. So I might move that back to small caps into the end of the year, and just hold some small caps into the end of the year like a basket almost. And then we'll see. Not right now, but maybe that's something that happens going forward. We'll see if we can at least get that to like $500. I think I got it up to like 3. Let's see. Let's check in the Roth here. Where is she at? 338. This week was this week's P&L about a 40% or so, $97 on the week on the small count. If we can, obviously that's asking for a pretty solid week again. But if we continue at that pace, you're a couple weeks away from hitting $500, and then having a decent return off of what we put in. So we'll see, we shall see. But that's the deal there. So EPS, I wouldn't get too caught up in the numbers about some of these small caps. Either worrying about the earnings, the revenue numbers, just worry about how much cash. I think the biggest things is worry about how much cash they have. What's their incentive to do an offering? Like, would they potentially do one? Are they going to do one, right? If we can kind of, obviously you have no idea if they will, but can they? Number one, through filings, we can look at filings to see if they can do one. If they have a shelf offering on file, do they have a lot of cash? If they don't have a lot of cash, what does their latest earnings say? Did they say that they have funds to fund them through X date? Then you can kind of get a better feel for, like, they probably won't do an offering as we're at lows. But once the stock pops 20, 30, 40, 50%, the risk of an offering obviously is going to skyrocket, especially given how many stocks and how many companies are probably hurting pretty bad in small cap land right now, as we speak, giving this bear market, right? So they're all in trouble. So they're going to want to try to raise as much cash when they have the opportunity to survive. I want to check in on BitNile. Oh yeah. So remember this stock we joked about, or not we joked about, but this is an interesting one as well. As much as I hate this company, I'm not a fan of the CEO. As much as you say that, they just had an earnings report too. Interesting. So that earnings is out the way. This is another one of those kind of bottomed out ticker names, and it's a cheapie. I mean, this is an easy one that could go from, 17 cents to 20, 30, 40 cents. No problem when the big money wants to play. So this could be another one to keep on the list. I wouldn't hold it very, very long. Also, if we jump over to, let me see what's the site called? Open Insider. Yeah, I feel like I always forget that because I haven't looked, I feel like, in a while. Open Insider, and you check out Nile, small cap. Is he still buying? Yeah, latest buy was on October 12th. This guy is continuing to buy. So look at this. This is like the owner or whatever. This guy has continued to buy more and more shares. He has 48 million shares. 48 million shares. Now the stock is worth like 17 cents, right? So it's not as much as you think, but he's got a ton of money in here, and he has been buying this thing from the 2s into the 1s into the 50-cent level, into the 30s, into the 20-cent level, and now here into the teens. So this guy is loaded on this play. Now, of course, it's his company, right? He's insider. So, bias there, sure. But he's been getting slaughtered. But when you have endless money or whatever he's got going on, or he's pulling money from wherever, who knows where he's pulling it from, you can kind of do that. Let's check on the volume on some of these. That's another big thing to watch too. When you start looking at some of these stocks, these small caps, if you start to see them building a base with higher volume, like that's going to be pretty interesting. Now, can we see a lot of volume here? Not really. Relatively speaking, there's a little bit more volume, I guess. A couple higher peaks here compared to how it was end of August, but nothing crazy. But if we start to see some bigger volume coming in on some of these names, keep that in mind. Let's check in on Grill too. Grill, nothing crazy here as well. We had a lot more volume back in August, so nothing much there. Smile Direct's another one that I think was keep on the list. SDC, a little bit. SDC almost went to new lows today too. It's another one I think after this earnings, I think I'll be interested in maybe putting something in it on SDC. So we'll see, but that's the situation right now across small cap land. Look at Snapchat, by the way. I was looking at Snapchat. I had it started out. I played it on the small account today. For a bull flag break, and essentially the same exact chart that Rivian has is what Snapchat has, and Snapchat popped off today, and we'll see if Rivian pops off next week. But big move up on Monday Tuesday, and then consolidate for a couple of days, and then pop right there to that new high of the week just now, and then the gap fill is up here towards like 1060 or so. So we'll see if it gets up to that level next week on Snap if the market continues to strength, but. That's the look there. Let's check back into Rivian. The stock is actually down today, which I'm not really putting much weight in. I'm looking at this chart saying to myself, this chart looks exactly like that Snapchat chart. It's a classic bull flag across a bigger time frame. It's not an intraday. It's more of like this past week. So you got to buy, you got to play it accordingly, which is why I played next Friday contracts on it. We'll see. I'd like to have at least 2 more smalls. I think it's a good idea, especially those bottomed out names, and just off of, I guess I'll add Nile to that list because you know what? Why not? Even though I hate the stock, it doesn't mean that it can't run. Just like NAKD, like a year and a half ago, that made that nutty run, NAKD, just like CEI a year ago, like these companies are not actually good companies, but it doesn't matter. Like the stocks can still run, especially from some of these super cheap prices. And Nile has a history of some big runs back when it was DPW. So we'll keep it on the list, and might be one of those to add to the basket. So in terms of my potential basket right here, do I like NSPR? I don't like the chart as much compared to other ones. Like I did like the play. Still necessarily, I guess, technically do, but this, again, the market doesn't care what you think. From a chart perspective, Grill looks the best. ELYS, not really, but it's cheap enough to the point where, hey, if we get a small cap run, this is a stock to add to the basket, I would think. NVOS recently did an offering. The offering's out the way. This thing is down around 25 cents. I like that. I mean, obviously, we'll have to look at potential for reverse stock splits, and we'll see. But that's another one right there that I think that could be a potential gap filler, back up from 25 back up to 60 cents. That could be crazy. SDC I do like. Chart-wise is nasty, but could be one to start looking into. Absolutely annihilated name. VISL, chart doesn't look terrible. This could easily be a bear flag kind of right here, where you have this level right here at like 41, 42 cents. Once these higher lows break, you have a pretty big downside move, generally speaking, if that pattern plays out, but there's not that much volume here, so I don't really know. But someone's been buying it the past couple of days, it looks like, and then Nile looks pretty good too, at least in terms of it's down towards lows. Now, the next thing is like charts, like, okay, whatever, you pick your favorite charts, now you want to look into the stocks, catalysts, cash, earnings, and like, let's just see those things coming up, and then you can pick your top plays from there, right? Fundamentally, like, what are the better, more solid names, and then, go from there. So we'll see. Never too good with them. I think the thing about small caps is that you have to be very selective in terms of the time of year when you play them, because this is going to be, if we do get the end of the year rally like we tend to see in small cap land, this would be a great year to do it. Obviously, as funds are down huge, stocks are down huge, so 100%, 200% rallies could be easily made across the board in some of these names. But when the time is, when you overstay your welcome, it's time to move on. The biggest lesson from small cap land that I learned from 2021, and this is, I remember distinctly at the gym thinking to myself, my strategy is done. Like, I had a strategy that was essentially looking for bottoms, looking for charts like Grill, right? That look beautiful like this, holding higher lows, holding a bottom into catalysts, higher cash than market cap if you can find them, or just, decent cash standings, and playing into that. And then I was looking around, and there was literally no charts. There were no charts like this at all. There was none. All these stocks had gone on 100% runs or more. And I was sitting there like, now what do I do? But what I did completely wrong was I kept trying to find the bounce play, or the one that looked relatively decent in terms of, oh, this looks like a decent dip buy, versus saying, this is time to stop. It was February of 2021. This is time to stop playing the smalls. There's no more strategies here, and let's look for something else. Like that would, in hindsight, that's what it was telling me. But we've never seen the types of runs that we've never had that. Like back in 2019, we had a pretty nice refreshing move where, despite the market going higher, you would still have small caps make big runs, kind of like Grill right back in here, right back in October of 21, where they would make these big spikes, then they would come right back down, and then ideally they'd go lower, right? And then that you can play them again a couple months later. If you want to play them again, they offer a better opportunity to play them again down even lower. But we hadn't seen a time where that was 2019. And, right, I feel like right now it's like, now it's like the complete opposite of 2020 and 2021, right? Things just go down, down, down. So it's an interesting time, but it's not like those two times and, just never seen it. So when you haven't had the experience of trading it, it's much more different to ultimately learn from. But that's the the whole deal about, right, staying in the game, because you can learn so much more a year later, 2 years later. Amazon, let's take a look at Amazon. Funny enough, this thing was down huge, right, down to like 89, something like that last night. Let's look at the 5-minute chart. Yeah, it hit down to 87.50 or so. Look at this thing. Ever since then, if you happen to be a dip buyer in Amazon last night or around earnings time, and you said, yeah, I'll grab some Amazon, right, just because that's a decent time to buy, and you snagged it and you have an average under $90, you're already up like 15% off that already. Oh, in one day. Yeah, you're up 17% from the lows. Now, obviously, would you have gotten the lows? Who knows? But you're up massive off the lows already. So Amazon's gap fill up to about 110 or so. That could be the target for next week if we keep seeing upside. But I mean, beautiful. Essentially today, got above the VWAP, volume weighted average price, this white line, and never looked back. It just bounced there twice. Very strong. So that's the deal. Cars and cats in the house, very cyclical environment. That's the thing. So when you realize, and it also comes down to the macro. So all of a sudden, right, if we go completely risk off in like December again, right, it's the time to say, no, even though, right, it's year-end rally time, you might think, oh, maybe small caps are good. If we go risk off, let's say the 10-year is ripping back up, DXY is going back up, and the Fed is back, inflation can't come down, like that is telling you, nope, despite, what I think doesn't matter, like it's time to step away. Like you have to be, able to do that. At the end of the day, okay, I got my Labu to sell. Oh, cool. So that's done. So I sold that. So XBI ended up being a nice play. I played XBI. I played some Labu calls, very small, but versus $80. So I liked XBI essentially as it broke. Here's XBI. I play this one in the main account, actually, the main Webull account. I think it can go for a lot more. I have Labu shares in my Robinhood, so I'm not really care. I don't really care too much. I like the break here of this downtrend, and then I like the back test. And so we got the back test, and now the back test essentially came down to like $80 or just north of $80, and that was your flag right here. Back on, was that Tuesday? And then it bounced there a couple times, or that was the lows of yesterday. And this morning, double bottom this morning here at 80.48, and it's been a beautiful pop since then. And so I played some Labu calls. Obviously, they were pretty illiquid, so it's not like there were XBI. I could have played XBI calls, but I just couldn't find good contracts. I just didn't find contracts that I liked a ton that were like the right time frame. And so I played Labu calls for like next month. Made a few bucks. ABBV missed earnings. Can't believe it. Down over 4%. Let's take a look at those two. And then Tesla. Oh, that's interesting. That's probably hurting biotechs or the healthcare space a little bit today, I'd imagine, right? Yeah, chart's not bad. I mean, it's bottom here at like 134, so it's not terrible. It's 50 SMA is right here at 141. Pretty much held that area. 142. Pretty much held that area right now. Tesla was interesting because I had a level on Tesla from yesterday that I played. Yeah, here it is. The zone from, I think, was this Wednesday and Thursday that it held around this 223 or 222. Broke below that and then snapped right back up. Kind of interesting, but it came down to about 216 this morning on a dump and then snap back. A little rally there. Here's SPY. Oh yeah, here was a trade from earlier today. So I think I played on, this is a small account play. I played on the small account, but I just had this, I'll get rid of this in a second, but I guess I'll just talk about it now. So I had this level and I essentially was looking at SPY and it came up, hit this 386, pulled back, bounced right there at that 384 or 385 area. Why was that important of a bounce spot? Well, look at this. We draw a line in. What does that line up with? The highs of Thursday and the highs of Tuesday, essentially. So it bounced right there. So it pretty much held those two highs and then popped back up. And that was where I said, okay, I'm going to get in. And I said, okay, if we hold that, 385 area, that level, I'm going to stay in, which is why that risk was down to the red box, bottom of the red box. And then I was looking for a 2-to-1. So a simple 2-to-1 risk reward. Obviously, could I have played it for a little more? Sure. But I took profits at that 2-to-1. That was it. So I took profits up here towards like 386.50. It worked out nicely. So playing the flags, kind of not a perfect looking flag, but kind of a flag almost. And we're kind of getting one right now too. See if we get a high of the day on SPY. Just melting up. It looks like 390 is the next target to keep in mind. Pretty key level, pretty interesting level if we get there today. But again, it's the end of the day, so it's not something I would really be too worried about. Obviously, next week will be crucial in determining how we handle that level. So we'll see. Monday loading up on CWeb. China will come roaring back, and I'll 2x it. What's CWeb? China Internet Bull 2x. Interesting. I do, again, like we look, oh, this is a recent one too. Oh no. Look at that absolute destruction here. Yeah, I mean, it came down to 1760. Now it's there. This is, again, right, this is an interesting look at this stock. I mean, or this ETF, right, whatever. Man, like you could get a pretty double. A double is not a unrealistic expectation. I mean, a double puts you back up into the lows of earlier this year, essentially, is a double. I think the other one was like YINN. Yin is the 3x daily bull on China. I mean, this could be a triple for all you know. I mean, the way I say a triple is obviously there's decay, but like this could be the zone. These are the lows of earlier this year. If you go to yin, my goodness. I actually, now that we look at that, I do kind of like that. Especially because you have a risk level. Let me get rid of this freaking volume. It's just, I hate the volume. I like, obviously volume's important to look at, but like when it comes to the charts, it just like blocks like how we can see certain things. So it's like, okay, just get rid of it for a second. We have a low of Monday, right? So that's the level. In my view, it's pretty simple, right? If we hold Monday's low, I'm going to stay, I would be long, right? Because what that looks like to me is capitulation. So Monday's low happens to be at 1966. We're at 2170. So you risk $2. You're literally going to risk, if you actually play this, you're going to literally risk $2 on this for like a $10 upside type of play. Like you can play it for less, I guess, but I think the potential is for 2 gap fills, which would be up to like nearly $30. Okay, so $8 upside. I mean, my goodness. I like that. That could be a monster play if it pans out. This is all because Canada did a 50 basis points. That's how. Yeah, that was a big one a couple days ago. And the question is going to be, what does Powell do? Does Powell end up hammering us back on Wednesday of next week? That's kind of the situation we're in. We're like in a spot where it's like, what ends up happening from Powell on Wednesday? Does he try to kind of hammer the markets down? Do the markets not care? Markets like, screw you, we don't care anymore. This is just whatever, blah, blah, blah. And then they bounce right back and they keep roaring up. And then you're going to be in a situation where the Fed's going to be looking there, mouths wide open, like, we didn't want this. And the market's at, SPY's at 410, 415, pushing up towards the August levels. And they're going to be like, trying to walk it back down. And if that's what happens, who knows where we're going to, who knows where things will be sitting. Sell 20 puts on yin. That's not a bad idea. 20 puts. That level is 1964. What's the let's see what they're looking like. I might do it in the Robinhood account. Let's see. What are the options looking like here for next week? Next week puts. I guess you can go further out too, and you can get a little bit of a juicier. 20 puts for $100. It's not many contracts trading there. Let's go out a couple more weeks. Go out to the 18th. Yeah, there's a little more volume here. You get paid $200 essentially to sell 20 puts on yin. I mean, yeah. I wonder if I definitely can do that on the Robinhood. I wonder if I can do that on Webull here with the cash account. I wonder if you could. But that's not a bad idea at all. Look at this. I mean, honestly, even just from, I wish I was paying attention earlier this morning. I didn't realize it gapped down this much. But it was down here at like, sub $21. And I know that, if I was going to play it, the risk is going to be 1966 no matter what. That's how I would see it. So I don't dislike the idea. You're getting me interested in this idea. So we'll see. I'll see if I can pop through this and do it before the end of the day. But outside of that, I sold all this. Only position that I'm going to hold over the weekend is essentially just playing with small profits of this week. And it's this Rivian, a Rivian call for next Friday. And it's way out the money. It's a 40 strike. They're cheap. They're like 9 cents. Reason why is if Rivian breaks below this, I'm going to take the loss. If Rivian pops off like on Monday or like on Wednesday here, if it pops up and breaks this flag and goes for like, a $36+ move, then those options might go from, 9 cents to 20, 30, 40 cents, in a day or two. If it happens, Monday or Tuesday of next week, ideally. And if not, I'll get rid of it before Powell probably. As long as the chart I'm going to imagine the chart's either going to break down or it's going to break out. And then either one of the situations is going to happen prior to Powell. I just don't think it will. It could. I don't know if it's going to consolidate for like 2 more days like this. Like I feel like it's going to either, give us this or it's going to give us this. It's pretty, it's pretty black and white in my view. I think some of the risk on names didn't do as well today. You had a little bounce back in DXY, a little bounce back in the 10-year. So that's somewhat, I won't say it's a huge concern. It's still trending down, but the 10-year just, hovering around that 4% right now. So it was lower, a little bit lower earlier this morning / yesterday afternoon. So that bounced back a little bit. So that kind of put a damper on some of the risk the risk on names, and you kind of had a pretty big rally back up in some of the tech names that have been beaten down the most, right? Apple's up 7%. Not that it was beaten down the most, but Amazon off those lows went up like 15 to 20% off the yesterday afternoon's lows. Microsoft and Google having 4.5% days. So you're having good days there when you look across some of the risk on names I have on this list. Affirm's actually down today. ARK's up 2%. It's pretty good. Meta's up 1%. Coinbase is actually down. Snap is up 5%. My goodness, on Snap. So, and not as clean, not as clear across the risk on stuff. Portfolio lately pretty much moves like a leveraged NASDAQ. Well, I think the way to play it is, and we'll see how this plays out, right? But I think a good way to do it is if this rally continues, let's say into the end of the year, would offer a really good opportunity to lock some in. Now, it doesn't mean we can't go higher. And if this like whole joke of a melt up situation actually pans out because no one expects it to happen and it actually happens, yeah, are you going to miss some? Like if you sell like, into this rally, or whatever, yeah, you're going to miss you're probably going to miss a lot actually. But in the grand scheme of things, you'll probably be happy if you end up waiting on the sidelines, a year or two from now. Like you might end up actually being pretty happy you did. So, and if it happens, it'd be a pretty challenging thing to play because I think and you see it play out, the psychology, right? It's not easy. Got Snap at 7.70 last Friday. Nice. That's a killer play on Snap. I had Snap back in like a few months ago from 9 to like, I forget where I sold it. I sold it over 10, nothing crazy, but I think I sold a bunch of cover calls on it too. And I sold it before the earnings because I didn't want to deal with it. And I guess lucky I did, but then you could have bought it back after the earnings. So insane move for Apple. Yeah, that's a pretty big move. I mean, 7-8%. Look at Apple. By the way, look at this Apple now, right? Look at Apple's chart. Touching that 200 moving average right here at like 156.60. I mean, Apple is not going to be very far off from those August highs if it continues at this pace. It's like $20 away, which is a lot, right? But then again, right, from where it's bounced about $20 off the lows. So it's like halfway there, I guess. But yeah, if we go back to if we're looking out to next week, the situation with the Fed on Wednesday, it'd be really interesting to see because if Powell opens the door for any pause talk, I mean, I'm going to be really curious to see how this market rallies or reacts to it because is everyone, if we keep rallying hard, if we keep pushing hard, right, into Wednesday, I think that's going to dampen the potential effects of any pause talks by Powell or lowering the hikes, right? That will dampen those effects. But if we kind of flatline or pull back, ideally in a perfect world, right, we get rejected, in my view, if you want to go higher, we get rejected here at this 390, right, on SPY. Maybe we come back down 380, something like that, or 375, 50 SMA, or 385. 50 SMAs at like 384, pull back into that area, something like that, at least give us a little bit of a pull. And then, we can have a better potential rally off of Powell if it's going to happen. But who knows, right? Anything could happen into that event. So we'll see. I'm going to see if I can sell these puts on my end. Weebles on my phone really quick on yin. Next week, I could sell next week for 75. I've got like a week or two. I'll probably go next week. We have for tech expectations on the ground. I think that's the thing is the expectations are not high now on tech, and I think that this earnings bounce is you got to say it's pretty impressive. I mean, that we're actually holding up as well. So I would say my expectations are pretty minimal for tech earnings going forward, and I think a lot of people are in that boat, but that actually kind of makes things, maybe a little bit easier on them, at least in the near term quarters. We'll see. We will see. But yeah, hopefully we get a pullback ideally before Powell if you want to go higher, because I think you're going to minimize the effects of it. So let me look and see if I can sell these 20 puts on yin. See if I can do it. Sell one for $1 for $100. Get paid $100 for doing that. We just did it, baby. We just did one. So we're not really going to get, I guess I'm not going to get screwed by it, right? I'll get out of the puts if it ends up panning out, or we're going to go that way. But I sold a put there. So now we'll see if we end up cashing in on this one next week, but I sold it for next week. I'll pull it up in a second. So here's YINN, the China 3X ETF. The lows are down around 1971 on Monday. And if those hold, which we'll see, I think it's capitulation. I think it's a capitulation move. If those hold, then those puts will expire worthless. Or if we stay above $20, those puts will expire worthless, and I'll have $100. So we'll leave that in the background. Here it is. Sold it at $1, and these puts popped to 130 today at the open, I guess, and they've been kind of fading off since. So ideally, we want these to kind of just bleed out the next week, but that's it. So when it comes to swings like this, or I guess is it technically a swing? I'm going to be keeping them pretty tight in terms of not playing too many of them. Here's the Rivian. I'm going to probably grab one more of these, by the way, before just to round it out to a nice 10. They're really cheap, and it's a very small size. Again, it's a swing, so I'm not looking to play this with very heavy size at all. But I do like the look. Here's Rivian's chart over the past week. I mean, talk about build. This has been like the play of this week, just intraday or even just, past couple of days. Snapchat had a very similar look, right? Look at Snapchat. Very similar look, and now today it's popping off. It's up 5.5%. Nothing crazy, but it's up a good bit. So we're looking for the same idea on Rivian to play out. Risk on name. Holding up with really good relative strength, right, compared to the market. Had bottomed out in May. Maybe there's a new bottom to come in, but bottomed in May at least for now. And looking for this flag to break. I think targets of like 37 to 40 is not unrealistic in the near term. $40 breaks. That's a double top from earlier this year. $40 breaks. I mean, who knows where this thing goes? I don't really care, but that would be crazy at some point, but I'm not going to hold it very, very long. Amazon PE still 94, which is way too high. Interesting. Yin gaps needs to be filled soon. Kyle's in the house. Kyle's going to grab some out the money yin calls for next Friday, I think. All in. Take a look. Grab this thing and we're going to target. Grab some like 50s. Grab some 50 calls for next week. You probably cost like a cent. And you can probably get them for 1 cent. But yeah, this gap to up here to like 23.75 and up towards 29. Two spots to look at. My dad's been asking for some plays. Let me see if we can get him in on yin. Maybe that'd be hilarious. Tell him to get in. And make a casual, whatever that's going to be, right? If it pops to 30, right, in the next couple of weeks, casual 35%er. $5.50 or $6 calendar for SoFi. Let's take a look at SoFi. It wouldn't be a bad idea, maybe. They have earnings next week. That's right. I think it's getting nice. Well, 50 SMA here. So I don't know. I would be careful, but spreads could be the way to go instead of playing an individual, sided bet or playing like a just, straight up calls or puts. I don't know. The last earnings had a pretty big rally, right? The thing popped from, what is this? From like 650 and next day it hit $8. Again, after that earnings, I don't know if that earnings is horrible. I would have liked to see that. The thing about SoFi though, I'm really curious to see because think about this. And I would say that if I had to guess, again, you're gambling on earnings, but if you had to guess that potentially there could be some decent talk or at least guidance wise with student loan refinancing, because this coming up next quarter, right? The pause is over. So you're probably going to get a lot of customers flooding into SoFi who are going to refinance their student loans privately instead of with the government, maybe try to get a lower rate, potentially even though rates are still super high. So the outlook might be looking up for them. So we'll see. That's not a bad, and it's not a bad idea as an end of the year swing play too. At like 480 or so as your risk, it's not that bad. I mean, you're going to risk, like, let's do the math. Like if you got in right now just on shares, and you could sell covered calls, and you can sell some stuff maybe decently priced for next week. You're going to risk yourself about 13% to the downside here, and 50 or 200 moving outside that 200 moving average is up here towards 750. That would be about a 3-to-1, or risking 1 to make 3. It's not a bad risk reward. I'll leave that up there so we can come back and see if it ends up panning out. But I would just prefer, to be honest, I would prefer shares if I'm going to do it. But because I don't know how. I mean, who knows? Earnings is a gamble. Who knows what it could be? But I think we can actually get some good movement into the end of the year and into next year, maybe, to kind of price in some of the refinancers coming over. Who knows how much that will actually affect things, though. November 11th and 4th. You need to look at that. Love Green Fridays makes the weekend stress-free. Yep. Where are the TQs at? I was looking at these guys a while back, and I had a position, but I think I had a position in them a while ago. Let's see. If you happen to buy that, looking back, if you happen to buy that CPI day on the 13th, my goodness. Oh, my goodness. I guess they're not as good as they could have been because they haven't been as strong as the S&P this week, but if the S&P stays up, they'll eventually catch up. So you're at like, what is this, 2168? I think we'll hit up to the highs of August were 39, almost 40. Probably have at least 50 SMA in the tank, I think, 24 at least. Geez, that yen play could eventually bottom out. Yeah, you're buying a bottom. The only reason why I like it now, and I just sold a put, so it's not like I'm really going to be gambling very much on this. But essentially, unless it absolutely plummets, I guess in theory I could still get rocked technically. But what's like $100 or $200? Not that big of a deal. But the idea behind this, in my view, is like this is capitulation, right? That's if you are looking to find capitulation, like this is like the definition of capitulation in my view. Like, do I really trust or believe in China long term? I have freaking no idea. I don't really care, right? Because on a capitulation move, you get a bounce like this. That's all you're looking for. Who knows what happens after that? But if it goes like this, you can cash in massively off of that. Now that's even a lot, but at least this gap to like $30 looks very realistic. And then if you do the math on a risk reward basis and you risk the lows of Monday as that capitulation sell off day, what's the math? It's pretty nuts in terms of that risk reward. That would be about risking about 10% the downside and targeting this gap fill up to about 29.30 would be about a 3.6 on the risk reward ratio. It's beautiful. That's beautiful. So I like it. Got a ton of TQs, but it's red to sell and cover calls. Go along the market, short the yields. I think that's the other thing we're looking at. I think we talked about what's it called? What's that stock? DRV, the real estate short ETF. It's been getting rocked, right? Well, it's just breaking down off of where it was. But yeah, this is probably going to come down a good bit more. And people are going to look at this and go, oh my God, how is this thing coming down? Like real estate is going to, the toilet. Yields, it's just yields. It's playing off the market and yields. I mean, if the market's up and yields are down, this is going to be down. DRV is the bear ETF, 3X bear ETF for real estate. And it's not a perfect correlation to getting, perfect exposure to real estate either. But I think that's going to come down a lot. Could come down a lot if yields keep coming down. To 60. 60 on yen, imagine. Grab it at 20, get a quick 3x. Nah, I mean it would probably take some time. That's a big picture swing. And if you have the conviction for that, then yeah, maybe, but who knows? I would say 30 is like, if I got 30, if I was in it, all right, I'll take it. But we'll see. I mean, we'll look at next week and just, if this option expires worthless, then that's $100. Oh yeah, I gotta get this Rivian. Let me get this Rivian really quick. Let me grab one more of these contracts at 9 cents. My average is 10 cents. That won't change the average, but here's the look on these. Not that you can kind of go off of what happened on Tuesday as where this could go, but when Rivian, because there was more time on it, so you're getting time decay as well. But these popped to like 37 cents on that pop, so that would mean that we get on Rivian. Let's just see if we get a pop to like the highs of this week. Which, by the way, here's the daily chart, which is beautiful in my view. You're perched up on that 50 SMA. It's a beautiful flag that's setting up. It could break down easily. If it breaks down, get out. But yeah, you break up to over 35, 36, you're probably going to get this is going to go 100%, go from 9 cents to 18 cents, I would think pretty easily, if that happens the first half of next week. If it doesn't happen before, Powell, probably just cut them because there'll be some value there and just cut them before Powell. And yeah, if you miss out, if it goes and the market rips, you miss out, but it's not worth really, at that point, I don't think it's worth it holding through Powell. Not don't REITs for now. Yeah, I think there could be some opportunities, good opportunities, maybe next year. We'll see what happens market wise. But looking at real estate or realty income is the big monthly dividend payer. How are they doing today? Well, they're doing good with the market, but they got slaughtered the past couple of weeks. Yeah. So, and I don't think, I mean, who knows? But when rates are coming down, I guess it's helping. But maybe this is not maybe. It's going to be a stock I'll be looking at, maybe into next year to add at some point into the covered call portfolio. It'd be kind of cool if this thing came down a lot more. If we got a sub $50 price, man, that would be juicy. Very juicy for a monthly dividend payer. You know what I mean? Plus, I'm wondering what the option chain looks like on realty income. Curious how you can. Oh, you got monthlies. Okay, so you got monthlies, and you could sell, a couple dollars out the money. Get paid an extra $30 per 100 shares. Not terrible. It's an extra little dividend to pay yourself every month on top of the monthly dividend you're going to get from the stock anyway. Yes, Rivian calls. To be honest, it's risky as hell, the ones that I'm getting, so I wouldn't necessarily play the ones that I'm playing. But if you do like the setup, and the setup is valid until it's not. That's the way I'm playing it. It's a chart setup, that's it. So as long as we hold, it's this level, this zone is like 33.90. If we start to break down below 33.90, I'll be out. I don't want to hold that. So you're risking 60 cents of downside for, obviously who knows where the upside target could be if you zoom out on the daily chart. You got a high right here of 37.35. It's a pretty good risk reward in my view, just for shares, even, or an option with time. You want to buy more time. The ones I'm playing are next week expiration. I'm not intending to hold through the Fed anyway. So, and I'm looking at this pattern saying we kind of we had a big move up and we've just consolidated for 3 days now. We're probably getting close to the end of this pattern, getting to the end of this point where either we're going to have a breakdown or we're going to have a breakout. And based off of the market movements we've been seeing right now, and based off of this support level, the edge in my view is upside. You have a better probability of this actually breaking to the upside than downside, and it's just a classic bull flag. But of course, it could break to the downside, and you just move on. Sold 1,000 shares of Mara today, 14.10. Had to reduce the crypto miner exposure. Need Alibaba to reverse. No, I mean, imagine what's his name? Charlie Munger is a massive. He bought a crap ton of Baba. But yeah, let's take a look at this chart. Yeah, I mean, if the lows of Monday hold, man, that's you're gonna look back at Baba. You could look back at Baba years from now and say, hey, it's like $100-something and be like, oh wow, that was a great play. Wheeled O for a year. Nettle, I'm seeing Nettle. You should get Nettle, basket of all these. Okay, I'll write that one down too. What's up with Nettle? Corporate real estate ETF. Zoom out on the weekly chart here. Yeah, I mean, obviously this is going to get hammered. I mean, or this could get hammered if real estate continue, or if rates go higher and real estate tanks. But you got a nice, I guess you kind of even have a, let's see, can we, that's kind of your downtrend right there, or your lower lows versus here's your lower highs, kind of this little channel for now. So you're kind of in between. You're in the middle of nowhere. If you were down towards 23, maybe a better buy. Yeah, I will see. I'm not really interested in it right now, but in a perfect world, if we had some funds to toss in from, let's say, some of the other 3X ETFs that I own that I dump at some point, and looking for a safer dividend play just to kind of put away and not worry about, this is not a bad idea. Not a bad idea. Stag. I know a lot of people like Stag. Let me just write this one down so I don't forget it. A lot of people like Stag. I've seen a lot of people talk about that one. NETL. Keep that one in mind. Used to have a few K in O, but switched other things. XBI booming. Yeah, XBI, my goodness, right? 84 approaching right now on XBI. Beautiful freaking, well, I guess it's not even back to the highs of Wednesday, right? But really nice move on XBI. I had those Labus that ended up panning out to be good plays. All I was looking at was this zone right here. I played it versus this zone, and it held today. It was in this morning, I might have to cut it for a loss, but no, it held. and bounced beautifully. As long as you're working, you can take big swings. Well, that's the biggest thing, right? If your income is from, your portfolio only, you can't really, you're at a much more, at a substantial less disadvantage, right? But if you can always put money back in, or you have that income to pay the bills at the end of the day, it makes it a lot easier emotionally, mentally, to handle, right, the ups and downs or the down draws or whatever you're dealing with, right? VRSK. My goodness, it's having a nice little day here. Oh yeah, let's see. You double bottomed right down here at, what is this, 164 pretty much. Higher lows building, you're kind of in between. The problem with right now, if you're looking at the market and saying I want to go long right now, you just had a really strong week. You had 5 days of nice gains, or even more depending upon what stock you're in. And then you have a Powell situation next week on Wednesday that, he does not want the market higher from an inflation perspective. And they believe that keeping the market lower will help with inflation. So it's a weird spot. So how it's a gamble, but if he does come out and talk dovish, a lot of stuff can keep going. But you're at the 50 SMA. I think maybe there's going to be some resistance around this area. Maybe not, but then you have volume right here up to 188 or so. That should be some volume. Well, there will be some volume resistance there. We'll see if that doesn't, of course, these are just areas to keep in mind. Doesn't mean that it has to get rejected there. If the market wants to rip hard, it rips hard. But I guess on a relative scale, I think dips versus that 164 double bottom right down here from October, that could be a decent trade opportunity outside of, a long-term investment perspective, right? From a trade perspective, you're getting a better deal, obviously, than what you would have gotten, months ago. Got in at 173. That's a pretty good spot then, yeah. If you got in at 173, then that's good. Your risk is, obviously, yeah, if it's a long-term hold, right, then different story for you. I don't know much about them, so I can't speculate on that. They have earnings coming up, looks like next week on Tuesday, so that could be a mover for sure. But if it just respects this 164 area, from a technical perspective, the trend actually might be headed to the upside. First year I used the same strategy and realized, yeah, I think that's the problem that I think a lot of people have learned or are learning or will potentially learn if this continues. That's the whole reason why I kind of felt about options and playing the day trade side of things. Because I know that there's scalps and there's short-term plays that you can, even just short-term swings that are there, and playing that type of stuff is going to always be there across. If you play SPY or play QQQ or play IWM, whatever, it's always, or large caps, there's always upside, downside, bull flags, bear flags, back testing, support, resistance levels, whether you're going up or down. That stuff is always going to be there. The patterns repeat no matter bull market, bear market, doesn't matter, bear market rally, doesn't, they'll all be there. So that was my whole thing with small caps is I thought, years ago, or when I got into things back in 2019, 2020, I was like, I just I don't care what the market does. I'll just play small caps and just trade my, my same swing strategy and realize that, hey, that doesn't work all the time. So, there's always going to be action in large caps, and small caps, will be there. I'm definitely going to try to be there for, some of the rally or some of the moves maybe this year if we get some, but there's no guarantees. Especially if we stay risk off or we go back into, more risk off. So I didn't realize all these tickers I had, this was too low. So now you can see the price of the ticker that we're looking at. My bad. Learned a lot in 2022 about how to protect downside before I never even cared. Yeah. No, it makes sense. I feel like a lot of people, don't care. Like, yeah, who cares? Doesn't matter. Markets go up. And now they realize, oh, shoot. Same with the long-term investors, right? If you're coming from a long-term perspective, if you just know about if you have any sense of hedging, you could potentially hedge. And if you do it properly, there's One way to hedge is like, oh, I'm going to buy next week puts. It's like, okay, yeah, you could do that if you are super long, or like you had a ton of super short-term put expirations for next week or calls that expire next week. Yeah, maybe buy a put just in case or have something to hedge yourself, I guess. But in terms of a long-term portfolio, if you are just a buy and hold investor and we get to all-time highs or we go like crazy and you're looking at the macro and you have reason to believe that there's concerns, then hedging yourself with a 3x ETF or not even a 3x, a bear ETF, just shares, not even playing puts, or buy some puts that are long dated long dated in the monies or something like that to hedge yourself. It helps because then, you can protect some of that downside. Then when, we do get the downside, take off the hedge and then you could add it back into other long terms that you were holding or whatever if you really wanted to. I'm one of those starting to rethink the stop loss strategy. No, I mean, it happened. I mean, by the way, the market, I didn't realize the market just closed. So SPY, this is a literal perfect day of like what we can see on a Friday and where like every dip gets bought. Every dip gets bought and it's not super apparent until like we get to like noon, 1 p.m. Eastern. And then it's pretty clear. We've seen this happen a couple of times. And today was that day. Just slow melt higher, squeezing out little by little. That's the deal. But when it comes to the stops, if you have, the way I view it is like you could kind of, the reason why you don't put a stop or you don't have one in mind is because you think you know what's going to happen, right? In reality, like you might, here's the thing. All we know is all we know is what we see. All we know is a pattern. All we know is the macro. All we know is the data that we have in front of us. Like we know that, but we don't know what's going to happen tomorrow. We have no idea what's going to happen next week. And we have no idea how the stock market or the stock we're looking at is going to react price action wise right now or near term. So if we don't know those things, the only thing that we know is that we can we can risk this to make this. And we know that, hey, based off of X pattern, based off of this data, based off historically, or based off of, support resistance or the bull flag, whatever the hell you're going to look at, this as a higher probability of happening than this. And so I'm going to position myself in the higher probability, risk this. And all I need to know is that works out over time. I don't need to care about what happens this time or this stock, this specific setup. All I need to care about is what happens over time at the end of the day. And it's much easier said than done because you'll find yourself saying a lot of things or doing a lot of things. And then when you take a step back at the end of the day, once the market's closed, whatever, and you're like, why did I do that? Impulse. I think I know what's going to happen next when I really don't at the end of the day. You'll realize like that was kind of dumb, right? And it happens. We all do it. Like it happens all the time. But managing that and having a much better control of that, I think it makes things so much better, right, in the long run, realistically from returns perspective. So my Rivian ends up closing like flat on the day, down 1 cent. But we'll see. She's set up for next week. We'll see if we get a pop. If we do, Monday, Tuesday time frame is what we're hoping to see. But concern is that the market might be, if we get a pullback day Monday or Tuesday, maybe that's going to bring this thing down with it. Maybe not. But if it does, we're out. Ideally, in a perfect world, we get a pop on Monday morning. I'm going to sell that pop on those options, and that's it. So I'll perform hard. I don't think, who cares? I mean, at the end of the day, because the reality is that if you can outperform, or you in general on a week, well, then when there's a red day, if you can be green on a red day, then you're doing something right, I guess, right? So those yins, those YINNs, they're down to 9. They finished closing it. They closed at 99. So where is yin at, by the way? Let's just see where it finished up. Did it finish strong? China 3X bull. Yeah, it did. So those puts should bleed, especially if the longer we hold, up in this low 20s, those will bleed out pretty nicely. So China killed me. Key levels of MA. MasterCard, let's take a look. So it had earnings already, so that's done, which is good. 50 SMA right here. Well, that's a good spot. 50 SMA, and it lines up with, not perfect, but a lot of lows from this year right in here. So that would be down to about, what is that, like 310. So if you're looking for pullbacks, I think pullbacks versus the 310 area is a spot. Now, of course, it could spike down. It could wick a little bit lower. 305 is technically the bottom of those wicks. You can draw a horizontal line there too. But that's the spot I would keep in mind. 310 and 305 for downside are the two spots. In terms of upside, there's the 200 moving average here at 339. That's also right up with the highs that we saw of early September. So that's a spike right there. That's right there around 340-ish, 339, 340. That could be the magnet of where we head next. And then if you broaden this chart out, what's going to be funny, very funny, see where that blue line I just put in is? See how there's a red line right above that? That's the volume point of control. That's the price point where we've seen the most volume exchanged over the past 2 years now, or even almost 3 years. No, 2 years, sorry. This is going back to late 2019, I guess, almost 3 years, which is like right at like 341. So that is the spot. So keep that 340 in mind for MasterCard in terms of upside. That could be a really strong resistance. If you get above that, that's also pretty close to that with those 2019 highs. Ideally, you want to see this thing get above that level, build a base there, and then bounce. That would be a nice setup, ideally. But until proven, you can't expect that. So that's resistance for now. Keep that one in mind. But that's a nice, not a bad, set. I mean, that level looks pretty cool at that 340. Morgan Stanley underperformed today. I can't wait to see. I've been seeing, also I've been seeing too, and I guess we all have bias, and everyone has, whether you realize it or not, but we all have bias. But there's a lot of people that I used to respect on Twitter that I would follow trader-wise, back when I was in small caps, who've transitioned to large caps and whatever. But I mean, I've found some of like the most insane biased traders, and they claim to be traders, but it's like, I don't know how you are still in this game if you have this, if your bias is coming out this much. And what it is looking at this rally right now and saying like, this is BS, we're going lower, all these different things. We might, right? But if you're buying puts this whole time, you're getting squeezed, you're getting burnt like to a crisp. So, and just the way I see it now, it's like, just see whatever what the price action is telling us is more important than your bias and then the macro, right? Bias that you think because the economy sucks, right? We look at the 5-minute chart on SPY, past couple of days, like look at this. Ever since that CPI back here on the 13th, that CPI dump and then rip, what do we have? I mean, we just have higher lows and higher highs. Like it just, again, made a new higher high today from that level. Now we're lining up with the highs from back in, late September. So until that tells us, or until we reverse, right? I mean, why are you going to fight that trend? I don't know. You can always play the downside even in a bull market. You can be a trader or a short trader that still makes money in a bull market, right? But that's just bias. And it's just like, you leave the bias at the door because it doesn't matter, right? Who cares if you're trying to make money now? So next week going to be a nail biter. Probably do after my SPY strangle again. Sell on half the first move, the other half second move, both directions. I don't care what it does as long as she moves. I think that's a good way to do it too. I think we're going to get a big move, I would imagine. Ideally, I was saying ideally we get a pullback early in the week and then Powell. But who knows? That 390, we're pretty much right there at that 390 area, closing right in that level. 50 SMA is down here towards 383.50. 380 is that. Well, actually, look at this. On the daily chart, that 380 is the spot that's held. We held that 380 beautifully so far. So that little level right there is pretty important. And then below that, I have a 378. That was the highs of early October. So that's that. In terms of, I'll post updates in the accounts and everything tomorrow like I usually do. Logged in and all that stuff. But the only play that I'm going to be swinging, well, I technically have sold puts on YIN or on yin. I sold those puts. So essentially what I'm betting on is yin does not go below $20 by the end of next week. And what the play might be here on yin, to be honest, instead of buying shares, is just selling puts on the way up if it keeps going up for until it fills this gap. Might be another idea. And maybe you can keep selling the 20 puts, and as it goes higher, those puts will be less and less valuable each week, but it could be a couple extra bucks to cash flow maybe. So not a bad idea, keep in mind, instead of going into the shares. But who knows, it does tie up buying power, so be careful of that. If you are going to sell puts on anything, it ties up buying power of 100 shares per put. But Rivian is this is my other play that I'm holding swing. It's about like, I don't even know, very small size. Pretty much what this week's profits is I have in that. But I'm looking for either a breakout or a breakdown. Simple. That's the deal. That's why I'm a fan, educated, and seek improvement. That's the biggest thing. You guys are like, it's kind of funny. And in this space, it's very funny because we talked about this before. Like, you have a lot of people who have incentive, right? There's a lot of incentive to only show you the greens and only show you the positives. But first off, I've said that that's not. We all know it's not realistic. Number two, it's also not helpful because there's a guy I was just looking. I saw a video yesterday. I happened to be scrolling through, and I saw a video, and he was explaining like some trades, right? And some people post like, they can post live stuff. He's explaining his trades, but first off, he's explaining them after the fact, which is fine to learn for learning purposes, right? Posting screenshots, which first off, do we even know that the screenshots are accurate? Who knows? But going through the trades was talking about these scalps, and I'm telling you, like, they were looking at the big picture charts. I mean, it just didn't. I mean, it's just not my style, I guess. But these scalps were so small, and in hindsight, was talking about how bottom ticks and top ticks. I'm like, in the moment, how do you know that that's the bottom and that's the top? Like, I know that there's key levels you can watch, but in the moment, there was no confirmation. Like, how do you, like, it amazes me that I'm seeing like some of that stuff. It's like pretty crazy. Like, and that is also not really like super helpful because it's not really giving you the thought process of what was happening at the time. And then what happens when it goes against you, How are you that fast to cut? Maybe you're just that fast to cut it off and move on, I guess. Maybe, but that's the deal. The whole improvement side, that's what it's all about. And I think, you guys can kind of see the progression, at least in how I've been viewing things a lot differently lately. And yes, does it potentially line up where we could get a pretty big rally in the markets and then, you could missed out. You could have held some of those options and would have gone crazy. Like, yeah, sure. But that doesn't matter because what it'll be doing is just, reconfirming the bad habits that I had in the past that are going to bite me in the ass at some point in the future. So what's the point of that, But that's that. Holding and hoping is what you got to stay away from. Exactly. Caught up in hunches. And that's what we all do. It's a lot of speculation. But it takes time to work through that stuff and to realize, what you're doing and to figure it out. Constantly improve. That's what we got to be doing. Yeah, 100%. Don't scalp. Yeah, I don't like it. From my experience, people, you can do it and you can be the problem that I have is that you can do it and then you get carried away. And then it's there's one that goes completely against you that you can't cut it off fast enough, that you hold a little bit longer, blows up the day. So it's like, what's the point in my view? Bigger picture moves, even if it's intraday, it's bigger picture moves. You don't have to worry about the 2-second move. Like, you don't have to be sitting there like at your mouse, just like seconds, like sweating, about to hit the button, like freaking out. Like, no, there's heart racing. Like, you don't have to worry about that stuff. At least that's how I see it. But we'll see. We'll see how things play out. So we'll do that. We'll log into the accounts and show them everything there. I think it was a decent week across the board. But I finally am going to get to pay myself from the Webull account. We'll keep doing that and keep resetting it every week. But that is the plan. People going crazy. I know the thing about some of the scalps too, especially on options, it's like, made a couple thousand off this play. And I'm like, first off, you had a SPY put. Now, of course, you can buy same day expirations and those things move. And they had a SPY put for like, a 20 cent, 30 cent, 50 cent scalp. I'm like, SPY could move, a couple dollars pretty fast, right? You're on the wrong side of that. Just like, I wouldn't want to be on the wrong side of that. So it's not for me, but just not worth the massive losses. You can keep the losses a lot more in check, I think, on the bigger picture. When you at least zoom out to the 5-minute and 15-minute charts, at least do that. And then you can minimize losses a lot easier, I think, for sure. But we'll see. We'll see how things play out. And then, we'll go from there. So next week should be an exciting week. Outside of that, hope everyone has a great weekend. Enjoy the weekend. Get outside, do something fun. And I'll see you guys next week. We'll probably go back to 3 lives next week. Maybe we'll see. Probably back to 3. But I'm going to be away, not next week, the week after that, like midweek. So I'm going to be away like for like a decent chunk of the time in mid-November. So we'll try to get some more lives in. And then we'll do a small cap. Maybe we'll do a small cap brainstorm one of these nights to kind of go over a bunch of plays instead of just, talking about what's happening right now. So we'll see. We will see. Not enough risk reward as well. Might as well work at McDonald's. Yeah, a lot less stress. Yeah, 100%. I think it feels a lot more like gambling. Yes, I think that's very fair. If you have a computer, an algo or whatever that can do it and not have to think, maybe, sure. But if when you're the one behind the desk that's hitting the buttons, I mean, you're asking for trouble, and that's all I see. McDonald's and wing managers. That's where we might be headed here. I feel like if this market keeps going down, right? But no, we'll have stops in place, right? So with that said, thanks so much for watching, guys. I will see you next week. Enjoy the weekend. Should be another exciting week after this pretty big week of strength, but should be an exciting week with the Fed on Wednesday. So we will see, and we'll be ready for that. We'll have a stream for that as well. Thanks so much, guys. Hit the thumbs up button on the way out, and I will see you in the next one. Peace.